Well, very good morning, everyone. It's George Bairuthi here from FS Securities, giving you the market report for Monday morning, the 31st of July, 2023. This is actually our daily and weekly report that we provide. As you can see here, there are a lot of information available to you, but we're going to go onto the certain areas here. We're going to click on the area of interest. So we're going to start with the 3-week wrap up. So we expand this and we see a bit more. We take it to the last section, enlarge it a bit further, and what you can see here is that the Dow on Saturday morning we found that was actually up, and over the week was actually up nearly 3%. Over 2 weeks combined was up 5.1%. However, you can see there has been a decline further down. So if you look at the full year, the Dow Jones is up 8%, as you can see here. The S&P 500 is up 11% over the year. And last week was up 1.7%. We had a good week for the American market. The Nasdaq Technology Index was up 1.4%. That's last week. Over the year is up 15%. In Europe, the Stoxx 50 index, which comprises most major European markets, was up 20.5%. And that's on the back of the DAX in Germany, had a very good run over the year of 22% return. And quite a bit of that came last week with 2.3% rise last week. The FTSE also had a good week last week, was up 3.5%. However, when you look at the full year, that's exactly where they've done for the whole year, almost 3.6%. So you can see most of it happened last week. Obviously, there's been ups and downs, but you put the whole year in perspective, and you can see that the FTSE over the year is only up 3.6%. In Japan, the Nikkei is up 18% over the year. However, the Hang Seng and Shanghai were both down over the year. However, Shanghai last week was up 2.4% and the Hang Seng was up 2.6%. The next window you can see on your left, you find that the Shanghai, if I did that presentation 7 days ago, I would have told you that the Shanghai was down 10%. So there has been a recovery over last week by improving the year results by down from 9.8% to minus 4.3%. Our market, of course, that's the major interest for us. Last week was up 1.4%. Over 2 weeks combined, up 5.1%. However, 3 weeks together is up 2.8%, and that is the result over the month. And if you look at the whole year, our market is only up 6.6%. If I did that presentation 7 days ago, I would have told you that our market was up 7.7% over the year. So you can see there has been a change. Now, gold finished on Saturday at $1,959 US per ounce. It was up $4.30, 0.2%. However, over the year, hardly moved, only 2.6% over the year. Silver, on the other hand, down 7.7% over the year. And copper, that is actually the World Economic Barometer, because everything that you use in any industry, most likely you will find copper utilization. Well, copper is down nearly 13% over the year. And Brent and crude oil were both down, as you can see here, over the year, 15.2% and 17.1% respectively for the Brent and the West Texas crude oil. Soybeans, you can see that Chinese have been buying. Over 3 weeks was up 3%. And Australian dollar was trading at 66.6, down nearly 2.6% over the week, down 0.4% over 2 weeks, and almost steady over 3 weeks. Okay, let's go further and try to understand a bit more about what's happening. What we see here on the graph, these are advances and these are declines for the whole market. So on Friday, 27.4% of all the stocks advanced. However, 36% of all the stocks declined, and 36% did do nothing at all, did not move. And the volume was down. When the market overall is down and the volume is down, that is not really too concerning. When the market is up and the volume is higher, then obviously that is of a great deal of interest, because it tells us that the buyers are in the market and the sellers are actually sitting down waiting. Waiting for what? That's a good question. However, you can see here, out of 8 days, we have 5 days where the declines exceeded the advances. And these are the volume every day. However, if you look at the bigger picture, and each of these bars make up 5 collective days together, and you find the last 5 days we've seen more advances than declines. So even though here we've got percentages, it doesn't really mean anything at all, because it means that when the market is up, the volume is actually a lot greater than the declines. What we've got here, out of 10 weekly, you can say that each of these are 5 days collective, assuming each of those are for exactly 5 days. We have 1, 2, 3, 4, 5 weeks where the advances exceeded the declines. And that means more or less the market is actually volatile and indecisive. Some weeks are up, some weeks are down, and however, the fact that there are 3 weeks, consecutive 3 weeks, where the advances exceeded the decline, that is actually reasonably positive. Because if you go further to the left, we have here 1, 2, 3, 4, 5 of red bars. 1, 2, 3, 4 out of 5 bars where the declines exceeded the advances, and you can see that the difference between advances and decline is quite large. All right, now I'm going to take you to, just a minute, we go down here. Let's see what we've done in our markets, our trading portfolios. As a matter of, to start with, at the end of July 2023, that is only a month ago, we closed all our positions, or we actually reviewed all our positions for the whole year. You can see here that we started to trade on the 7th of July 2022, and we had 4 different portfolios. The aggressive portfolio, taking more risk, conservative portfolio, less risk, and then volume-based portfolio. We look at each day and each week, and we compare the last volume in relation to the 50 days or 50-week average volume. And if the last volume exceeds the 50-day or 50-week average volume, then we start to be interested. And now we're starting to look beyond this, is fair value for each of the product or each of the stock that we find. And then we have a momentum portfolio based on technical analysis. However, when you look at the whole year, that is from 7th of July 2022 to the end of June 23, that's a whole year, the market went up by 8.4%. Out of 4 portfolios, we did better. We outperformed the market for the conservative portfolio, where we generated 16.05% return, and the volume-based portfolio was giving us 22.3% return. However, we lost money on the aggressive portfolio, and we were almost break even for the momentum portfolio. However, we started to trade, by the way, and the year before, that is 21 to 22, from December 21 to June 22, we found that the market was down 2%, and 4 portfolios did much better. As you can see here, we outperformed the market across the 4 portfolios. Now see where we are today. Well, on Friday or Saturday, we looked at our results, and on Friday, by the way, the market was down 0.7%, and we also were down across the 4 portfolio, with the exception of the momentum portfolio. It was down as well, but not as bad as the market on Friday. However, when you put the whole portfolio together since the 7th of July 2022, we found that ASX 200, that is the market gauge, the market in general, which makes up the top 200 stocks, but however in market capitalization it's nearly 80% of the total market, which has got about 2,400 stocks. The market was up by 11.4%. Again, the conservative portfolio did 19%, which outperformed the market, and the volume portfolio also outperformed the market by a return of 29% return. So we can see here we've done reasonably well. The aggressive portfolio did not do well. It was down, negative. We lost money, we were losing money, and the momentum portfolio was almost steady. Well, let's see what's inside these portfolios. Sorry, that's stocks here. Okay, this is actually, as you can see, on the 30th of the 7th, on Saturday morning. Now, how did we manage to make 19% for the conservative portfolio? This is on the back of BHP. Believe it or not, BHP has given us 33.5% return. We had 500 stocks, 500 shares. We spent 18,000, and hang on. Yeah, that's right. The outlay was 18,000, and the current price is $45.80, and the market value is 22,900, and we received some dividends of nearly $1,200, and the return was 33%. Mineral resources, we spent $22,547. We bought 389 stocks. We went from 22,500 to 27,900. That's about 27% return. And Whitehaven Coal, we're making 35% return, as you can see here, approximately 35% return. Now, in the aggressive portfolio where we're losing money, now we're losing money on Lake Resources, 56%. We spent 35,000, and the reason for that, we bought and the market went down. We augmented our positions by buying more. You may say, well, that was madness, wasn't it? Well, again, the reason why we kept it and we continue to hold it, and sometime during that journey we actually added onto the stock, because I want to show you there is something very fundamental that we use in our trading, and that is the fair value. If you look at Lake Resources, the last price was 23 cents. It went from 24 cents on Thursday to 23 cents on Friday. However, if you look at the fair value, we use a lot of models, not one, but several models, to try to understand what is actually the fair value of Lake Resources. And this is actually, the fair value is based on many factors. Some models look at the revenue, future years, and then we bring the price down to today's value, and we compare the real value per stock versus the price of the stock. And all the models that we use, and as I said, we use several models used by academics and economists, marketing analysts and stockbrokers. We find that Lake Resources is 38 cents. So we have 64% extra value. Now, if the price goes up to 38 cents from 23, so obviously the losses we're making, the $20,000 loss we're making so far, will reduce quite considerably. The other thing that we are losing money on is called lithium. The last price was 66 cents, and look where the fair value is, $1.05. So that's why we're holding it. It's just the market has actually punished those two stocks because both of them rely on lithium. And you know that lithium, logically speaking, is used in batteries. Yes, there are different technologies coming along with batteries. However, lithium will be around for a long time, and new factories are opening up everywhere in the world using lithium. As you know, perhaps recently, the Indonesian president was here in Australia, President Widodo, and one of the projects that he's embarking on, trying to get some help from Australia, is to open a factory for batteries in Indonesia. And they will be using lithium, and they want Australia to provide the lithium to Indonesia. So there is no question about it. The market has punished lithium stocks unfairly, maybe. Well, that's your opinion or my opinion, or whoever believes it's unfair. And we think that we're going to hold on to it. The market has come down quite a bit. We entered the market at 73 cents. That's the average, 73 cents, and we're down to 23 cents, 56%. Mind you, the entry price was 73, but it doesn't mean that, okay, that's 23 cents, and it's more, that is actually the basis of our losses, because the losses base is worked out on the fact that we paid $35,000 for 40,000 stocks. The current price 23 cents. We're losing $20,000 out of $40,000, out of $35,615 outlay. That gives us a 56% losses. Okay, the good portfolio is the volume-based portfolio, and you can see here Life 360. Again, we discovered that particular stock by comparing the last volume on one particular day against the 50-day moving average, and we found that that volume and the fair value encouraged us to spend $13,635 buying 3,000 stocks. And you can see that now our $13,635 is now $22,800. We're making $9,200 profit. That is actually 67% return. Also, Temple and Webster, we discovered it via our volume, and every day we do that volume scan in the market, and we provide that to our clients who trade with us or trade by themselves. So you can see here 29% return. Obviously we can't make profit on every stock, but anyway, ASX is losing 6.6%, and then again we look at the fair value for those companies that we just looked at. Now $7.60 for Life 360, fair value is $9.07. Temple and Webster $6.60, and we find now that Temple and Webster is $6.41. Guess what we are going to do with Temple Webster? We are going now to close the position and maintain our profit. Maybe we can actually sell half. Maybe we can sell 75% and hold on to 25%. Or maybe we sell the whole lot. We're going to make that decision sometime during the day. But you see, we are driven by the fair value. And again, the fair value will actually be reviewed. We may have actually found that the market, the models that we've used when we came up with $6.41, now portrays that the fair value could be more than $6.41, or it could be less. So now this is actually now a time where we look at those shares that have actually shown some declines in fair value, and we take a decision immediately. All right, now I'm going to give you the full report. If you actually write to me or ring me up, I'm going to give you my details at the end of this presentation. All right, now let's have a look at the American market, because the American market has done extremely well. Now this is on Saturday morning. On Friday, the S&P 500 was up 1% and the Nasdaq was up nearly 2%. Our market on Friday, or actually Saturday morning, closed up 2.8%. Again, the American market has done extremely well since the 7th of July 2022 till Saturday morning, only last 2 days. The S&P 500 is up 17.4%. Very good return for the American market. The Nasdaq Technology Index up 23.2%. Because we do trade quite a number of stocks based on the Nasdaq, we've done actually better than the Nasdaq. We're up 30.2%. Okay, by the way, you can see here that over 1 week, our portfolio is down 3.4%. Why? Because a week before, we were up 33.6%. Now we're down to 30% return. But we're still outperforming the market. Now you may want to see what are the shares that we are doing. Okay, we find the best return. Netflix is giving us 84% return. Shopify, 86% return. Apple giving us 27% return. Microsoft, 50% return. And unfortunately, we lost money and we closed it at a loss. Novavax, this is actually a pharmaceutical company. We lost nearly 50% of our investment. We spent, we bought 10,800 and we lost, I think that's the price, total bought, 10,800. We're down by nearly $5,000 losses. That's US dollars, 46% loss. As you can see here, we've done extremely well across all the shares. Shopify and Netflix are the best. Microsoft, third best. Then you got Apple, Advanced Microchip. This is a microchip company, AMD. And Coinbase is doing, that's actually a cryptocurrency company. Coinbase is making 68% return. All right, let's move on. Now also, which sector is hot in the Australian market? What we do here is we actually compare what happened to each of these indices. Like for instance, the ASX 200 XJO. We have a recommendation of strong buy for the daily, weekly, and monthly. On last Friday, the market was down 0.7%, as we described that before. Over the week, it was up 1.2%. Over the month, is 2.8%. And over the year, is up 5.2%. Now, let's go down and see which index has done the best. 3.4 is energy, that makes sense. Information technologies is also nearly 3% up. And all the rest happen to be steady, but they are blue. The only one that is actually negative over the week is gold. However, over the year, gold is up 13.8%. Over the month is only 1.7% return. We'll keep away from gold. Mid cap also doing well, 4.3%. But energy, you can't do something, you can't beat the energy. Volatile, yes, 8.8% return. And information, 4.8%. And mid cap, the small stocks, 4.3%. Now, having seen that, now let's look at, see which stock is hot. Now, again, strong buy, strong buy, strong buy. Then you've got Macquarie Bank for daily. I'm going to just concentrate on the monthly. AMP is strong buy daily because over the week went up by 4.2%. Over the month down 1.3%. Again, ANZ Bank 8.6% return over the month. Going down the line, National Bank 7.6%. Commonwealth Bank, where are you, Commonwealth Bank? 5% for the CBA. Macquarie Bank, no, is actually for some reason Macquarie Bank is not liked by the market. And Westpac is up 4.4%. You can see that the banks over the month have been doing reasonably well. Which stock hasn't done well over the week? Well, you've got, we mentioned AMP down 1.3%. You've got some losses here for Coles, Macquarie, Newcrest Mine, Gold, and Telstra. But Woodside Energy, 10.4% return over the month, 4.5% return over the week, 0.3% return over the day on Friday. Again, we look at these trades, compare one price versus another price and see how they've gone up. And then the market will say buy, strong buy, or sell. All right, again, you'll have a lot more time to go through these presentation line by line in your own time when you communicate with us, and we'll send you the full report. Okay, now to move forward. Sorry, we go to the home page, and now we look at most active weekly. What we've got here is we look at the change in prices from one week to another, and we compare the change. For instance, Findi, a company called Findi, went up from 44.5 cents 5 days ago to 51. The change was 14.6% increase. And we find that there are, as I mentioned, we compare different fair value models and we come up with an average. One model gave us $1.12 versus 51 cents. That is nearly twice. Another model gave us $1.12. Another model gave us $6.84. We work out the average to be $3.02 or $3.03, and the price is 51 cents. Should we look at Findi and see if we want to trade it today? Absolutely. So that's how we operate. We start by looking at various prices change. We look at the sector which is doing well. Findi is information technology. Carnarvon is in energy. Again, 14 cents versus a fair value of 41 cents for one of the models. Look at the other models. Again, a third model gave us only 15 cents. So you can see there is a big difference between one model and another model. But anyway, we work out the average. And by the way, this model 15 cents incorporate 7 or 8 different views. One looks at return, one look at debts over assets, one look at PE ratio, various fundamental factors. So even we have one number here that comes from studies across different views on different areas. And we come up with an average. And if the average is higher than the price, we start to be interested. And we start looking. All right, so we've got a number of shares here. I mentioned Findi was up 14.6%. Carnarvon up 12%. Australian Ethical Investment. The reason why it's painted yellow is because it was up 2 weeks in a row. If you look at this presentation a week before, you'll find that Australian Ethical Investment was up as well. But anyway, we find that it went up from $3.59 to $3.99. And we keep going down the line. However, we look at the fair value, and you see here, some are painted red because they're below 100%. So that means the fair value is less than the last price, and therefore we ignore it. But Carnarvon Energy, we really want to have a look at Carnarvon Energy because you can see it's 41 cents versus 14 cents. If you're a bit aggressive, you may decide to actually enter that market and put maybe 1%, maybe 0.5% of your capital into it and just wait and see what happens. And remember, now when we trade any particular new stock, we actually look at target over, if it's a short time, 2-3% return over a short time is really good for us. However, we always put trailing stop losses. Trailing stop losses is essential. You cannot trade without having your back supported by trailing stop loss. Yes, you get frustrated. You get very frustrated because the market will push you out and then move up again, and you say, why did I sell? And unfortunately, the market is vicious. And you might say that logarithm. Look for people who have got trailing stop losses and try to wipe them out before they start to push the market up. So is the market manipulated? I'll leave that to you to consider. The market is not perfect, and there are a lot of algorithm, and the algorithm is based on greed and fear by the cowboys that actually design the algorithm. Megaport was up 3 days, 3 weeks in a row. It went from nothing, no colors, to yellow, and from yellow to blue. And again, last week went up from $9.87 to $10.06. It was up 7.4%. And again, the fair value is only slightly up above the last price. One model gave us $11.70. Remember, the last price is then $10.06. And here, one model gave us $11.72. One model gave us $12.88. And one model gave us $8.43, which means it's $11, the average of all the models. Now, $11, that's the fair value, and is trading at $6. $10.60. Is it worth the risk? No. If it drops and the fair value continues to be $11, then we might be interested. Okay, it gives you an idea about how we trade and what we look at. Now, if you look at most active daily, on Friday we found that SiteMinder was up 21.5% increase. Went from $3.53 to $4.29. Immediately after I close this presentation, I'm going to look at SiteMinder and see what the market has, how it traded this morning. Again, Tyro was up nearly 3.7%. And again, the fair value is $3.11. That's one of the models. And SiteMinder, SiteMinder is $4.24 versus $4.29. So SiteMinder is actually overpriced. The average is $3.34 between all the models. So SiteMinder, we won't be interested. Sorry, we won't be interested in SiteMinder because the fair value. But before we make a decision, we go back and review the fair value, because the fair value of every stock changes on a regular basis. And we may have actually studied the fair value a week or 2 weeks or 3 weeks ago. We can't really look at the fair value every day for every single stock. As you can see, there are a lot of stocks in our presentations. But we look at the top ones. And the first thing we want to do before we actually consider SiteMinder is to go and review the fair value for SiteMinder. Tyro as well. Tyro looks more interesting to us than, and by the way, it's diversified by financials. I think Tyro is actually like QuickBooks and MYOB. Weebit Nano is semiconductor. It's $6.20 versus one of the model, giving us $10.64. That's again, and the next one is also $10.64. So we might also consider Weebit. Okay, finally, I'm going to no, I think I'm going to stop here. As you can see, my presentation includes a lot of areas. So when you get this model, you can actually click on any of these links, and that will take you straight to the page that you have an interest in. So I've only covered, as you can see, all the ones in red or faint red, the ones I covered to you today. But look, you know, there are a lot more areas here, and you may want to actually spend more time in your own time and leisure. So now, if you're communicating with me, you can call me on 0411 259526. That's for the local people. Overseas people, doesn't matter which country you are in, you need to actually put 61. That's the Australian code for Australia, the code for Australia, the country code. 61, you don't need the 0. 6141125956. Or you can send me an email to george@FS-Securities. FS stands for full service. George@FS-Securities, plural, fssecurities.com.au. To trade safely and wisely, and have a fantastic week and day.